Hello traders and investors, welcome back to the Trend Trader channel. In this video we're going to be continuing with the TradingView tutorials. Some of the things that we'll cover today includes candlesticks, how we use candlesticks in TradingView. I will share with you why I prefer candlesticks over other kinds of charts. So I don't know how long this video is going to be. It will depend on what we are going to cover today. Hopefully it won't be more than 30 minutes. And those that haven't subscribed, please consider subscribing. And if you find value in these videos, please smash that like button. And if you have any questions, comments or suggestions, please leave them in the comment sections. In the previous videos, we've already spoke about how you can create a free TradingView account. It's up to you whether you want to use the free version of TradingView or you want to use paid version of TradingView. We also spoke about how we can set alert whenever we are trading when we use a TradingView, and also I showed you guys how we create a layout. So in this case, we are going to continue to be using that tutorial layout. I hope that you guys will still have that tutorial layout. So basically what is there, in my case, I just prefer the dark theme. Other people have a light theme, so it's up to you. You just change it here. When you right click anywhere on TradingView, then you go to color theme, then you can change the color theme to the color that you prefer. In this case, I'll be using the black color scheme. So by default, whenever you're opening TradingView, most likely what you're going to see, we are going to see a line chart. A line chart is as useful. So I'm going to remove all the indicators, then we will be adding the indicators as you go through the video. So when you start to open TradingView, it should look something like this. You should have the line chart that you are looking at without any indicators. I'm not sure if the volume indicator is there by default, but in this case, let us treat it as if the volume indicator is not there. Then there at the top, you can see the information about the security that you're trading. Also at the top of the search bar, you can see now we are looking at the chart of Bitcoin, and then you can see here we're looking at a Bitcoin US dollar, and then it tells you the exchange where it's coming from. So in this case, it's coming from a Bitstamp, and then we're looking at the daily time frame. Also, you can see up there we are looking at the daily time frame. Whenever somebody shares a chart, it is important that you look at the time frame that they are looking at, because if you're looking, let's say for example, you're looking at a weekly chart, then you're not going to see the same thing as someone who's looking at a 4-hour chart or 1-hour chart. Make sure that you understand where the time frame that the person is looking the chart at. So what you can see from the chart of Bitcoin, we can see Bitcoin, it has been falling down, then started to move sideways. This is not an analysis of Bitcoin, but what I'm trying to show you is that from the line chart, you can see the direction of the market, right? We can clearly see that it was on a downtrend before it started to move sideways, right? So if Bitcoin, for example, it breaks above this 24,000 level, maybe it can trade up, coming to this level here about 28,000. So there is enough information that you can see simply by using the line chart, especially if you are a long-term investor, because then you won't be interested in the opening and the closing price on every day or once per week, depending on the time frame that you are using. So a line chart is adequate for those people, especially long-term investors or people who just want to have a quick glance where the market is going. In my case, I don't use the line chart unless maybe I'm publishing an idea on TradingView. I either prefer to use the line chart or I prefer to use the area chart. So the chart options, you change it here next to the time frame. So when you click here, you can see all the different chart styles that you can find on TradingView. The default one is line chart. The area chart is similar to the line chart, except that you can see it has a bit of shade in there so that you can see where the price is at. It's another one that I use whenever I'm publishing ideas on TradingView. Then now when we go there, other people, they use candles. There's an advantage of using candles as opposed to using line chart. The reason why I prefer candles is because the candles, you can get an information on the candlesticks, right? We're not talking about candlesticks pattern, like for example when people are talking about doji or shooting stars or all those kinds of things, but what kind of information we can see just from the candle themselves. So let us just start by talking about the information that we can see there. So now I've just removed the chart of Bitcoin so that I can easily draw what I want to draw in there. Okay, so let us begin. The candles can be anything, so we're going to start just by giving the general information of the candles. Okay, so a candle looks something like this. It has a body, so the part that is filled with color, it doesn't matter what color it is, it's called the body of the candle. Then some candles, they also have something that are called wicks. So it's just the wick is like a stick on top of the candle. Don't mind my drawing as long as you get to see what I'm talking about. So in this case, we've got the body of the candle is the one that is shaded. So we've got the top of the wick and the low of the wick. I'm not talking about a wick as in Sunday to Sunday. I'm talking about a stick. So the information that we can get from the candlestick, in this case, let us just use this candle as it is. So here it tells us the low of that price, and then at the top there we have the high of that price. So the combination of the low and the high, it gives us the trading range. So whenever we're looking at any security, then we can tell how, or not necessarily the depth of that security, but what was the low of that day if we're looking at the daily chart, and what was the high of that day when we're looking at the daily chart. If for example we're looking at a 1 week candle of Bitcoin, then we can see that okay, it's about 19,600, the low, and the high it's about 21,400. But this is just an example, these are not the exact prices of Bitcoin. So when you look at the top of the week and the bottom of the week, that is where we are getting the low and the high. So now, because people normally use a red candle to show a bearish market, so now we're going to use a red candle so that you can get to understand what you normally see in a bearish market. Once again, don't pay much attention to how skewed the line, just get and understand the concept. Okay, so now we have this bearish candle. The body is filled with a red color. So again, this is the low of the day, and then this is the high of the day. But remember, in a bearish market, it means that the share price is going down. So if the share price is going down, it means that the market opened at a higher price. So this is the opening price, and then this is the closing price. So the price closed at a lower level than the level that it has opened in, right? So now when we're looking at a bull market or a green candle, it is the opposite of what we see in a bearish candle. Remember, the share price in a bull market, we say that the share price is going up. What does not change is the high. The high is always going to be high. It doesn't matter the direction of the market. In this case, whatever is low is always going to be low. But for the price, for us to conclude that the market went up for that particular day, it means that the opening price has to be less than the closing price, meaning that the closing price is high. So in a bull market or with a green candle, also the green candle has a body as well. So the price opened lower and then it closed high. But on a bearish market, the market opened higher and then it closed lower. That is why we associate this with a negative number. This one we associate it with a positive number. So this information is useful whenever you are using the candlestick pattern, not candlesticks pattern, the candle style. You can get this piece of information that is opposed to when you are using the line chart. The other alternative is to use what is called a bar chart. So in this case, these are the bars. Let me show you how the bars look like. So if you can just remember how this candle, this greenish candle looks like from the bars, and then compared it to candles, you can see it still gives you the same information, right? Let's just quickly cover the bar chart before we say something about the candlestick. So basically the bar chart, it looks something like this. So we still have the same line, and then depending, so the side of the wick doesn't really matter, but it's just half the information. Usually these wicks on the side, they are opposite each other. So once again, we still still have the low of the day and then the high of the day, and then we have the opening price, and then again we have the closing price. Then when we look at the bearish market on that bar chart, it's something that looks similar like this. So I will just leave the wicks on the same side so that we have that consistency. Then once again we have the low, and then we have the high of the day, and then the opening price, remember, it's up on the bearish market, and then the closing price is less. So in the past I've preferred, and it's still my preference, to use the bar chart because they take less space compared to those candles, because remember, in the candle you still need to have that other full body there, but this one just take less space. Then what I wanted to say is that when you look at this, we're still looking at the price of Bitcoin. Now I'm going to switch back to the candles. So when you look at this red candle, you can see it has that wick, but the wick is smaller at the top. When you compare it with this candle here, you can see that the wick at the top is a bit higher, and also we see a smaller nyana wick at the bottom there. But that, what I want to say is that if you look at this green candle here, some candles will just have a body without the wick, some candles will have the body with the wicks. The wicks could be smaller or it could be bigger. Sometimes the candle will have the body and then it will have a small wick. I will share with you what each of these means. So if we see a candle that has just the body without the wicks, it means that in this case, because we're looking at a bearish candle, it means that the close or the opening price is also the same high of the day, and then the closing price is also the low of the day. Whenever you're looking at a candle that has a smaller wicks on it, it means that the opening and closing price and the low and the highs are closer to each other. So in this case, the opening price is much closer to the high of the day, and the closing price is much closer to the low of the day. But when you see a candle like this, the one that is red there, that just looks like a cross like this, it means that the opening and closing price is closer to each other. Then during that period, in this case we're looking at the daily chart, during the day the price could have went up or down, but when the market closed, the price closed much closer to each other. Sometimes you find a candle like this, a red candle here, whereby we see it has a small body and then it has a bigger body. It's also the same thing, similar to this one. It's just that now in this case there is a bit of a difference between the opening price and the closing price, whereas in this case the opening price and the closing price is still the same thing. Then once again, another trick or something that you should keep in mind is that whenever you see this wick, especially when you see a candle like this, it shows that there is an imbalance between the buyers and the sellers. The longer the wicks, it shows that imbalance. Let's say we see a wick like this and a small body and then another small wick at the bottom. It means that during the period of the trading period, there were some a push-pull between the people that are trying to push the price high and the people that are trying to push the price lower. And whenever we see a price closing at the middle of that, it means that the buyers and sellers at that particular position are at equilibrium. But when you look at a candle like the one that we had for that previous day, we can see that the market, the low of the market was just above 19,000 there, and then the price, it closed somewhere around 21,380 US dollars, which is almost equivalent to that high of yesterday. So we can see the opening price. The opening price was below 19.5, but the buyers were aggressive. They managed to push the price all the way up there to that 21,000. But when you look at this red candle here, it is the opposite. The market, it opened somewhere here. You can see it's just a small tick that is sitting there. So the opening price on that day was very much close to that high of the day, but the sellers were so strong on that day, they managed to push the price way low, covering that range, which is about 20,000.5, starting from just above 23,000 there. So the reason why I prefer to use candlesticks, it's because there is that piece of information that I can find there, and information that I cannot find whenever I'm using a line chart. For example, if we were to just put a line chart in there above on what we've done, I didn't want to remove the drawings. So if you put a line chart here, we will just see that we don't have much information. So when you look at this, we don't know what was happening on this day, we don't know what was happening on that day, we also don't know what was happening on that day. We can just see that the share price of Bitcoin, or the Bitcoin price, it did fall a bit, then started to consolidate a bit before falling, and then once again we can see that the price, it seems like it's moving up, but we don't really see all the action that is happening there. Again, the same information that we found using the candle is the same information that we see whenever we are using that bar chart. That is why I said that I prefer the bar chart over that over the candles, but it's up to you which one do you prefer. Some people, they use hollow candles because they just look a bit different here. The green candles, they don't have shaded, they are not shaded in the body. And then other people use other different kinds of candles. There's some candles called Heikin action. So some people, they find that, you see the information now, it's different because how these Heikin ash candles are calculated is different from the candle. But some people, they use Heikin ash because from this, now I want to remove this. From this, you can sort of easily see where the trend is going. You can see here the trend is going down. Here at this level, the trend was going up a bit. But remember now, this, because they are calculated in a different way, there could be a delay in price. So if we switch back to Candlestick to look at where the trend was, so we can see the trend was up there, but it is not as clear as when we are using that Heikin ash candles. But then also other people, they use Renko bars. So Renko bars, well, some people, they think that this will work much easier for them when they are trading. You can see now with the Renko bars, because these ones, they don't take time into consideration. Each block is drawn differently depending on the settings. Let's say, for example, if the share price moved by 2,000 US dollars, then it creates that block. So the Renko bars is just tracking the range, not necessarily giving you information based on the price action of that particular security. So we can see on the Renko bars that Bitcoin has been falling down. So here we can see that maybe it's trying to form a double bottom. So if these green bars, they try to come up here and then reclaim this top and then continue to print those green candles going up, then maybe we can say that now Bitcoin is on an uptrend. But that is just something completely different there that you have to keep in mind. So whichever style of chart you are using, you need to understand how it is calculated, how does it work. There are people that use the complicated, or something that I find complicated, which is the point and stick. As you can see, there's nothing that I can say what is happening there. It is just beyond me. It's not something that I completely understand. I don't even understand it at all. So at least now in this video, I have shown you the different styles of the chart that you can use. In this case, we discussed the candlesticks and the line chart, and how you can also use the bar chart, the information that you get from the candlesticks there. Then there are other things that you can use to make certain decisions. All right. So now quickly, because like I said, I don't want this video to be to take forever. So now let's say now we want to add indicators onto our charts, because some people, they just trade using the chart as they are, but some people, they prefer to have indicators on their charts. So one of the indicators that is normally used is called volume. So when you go to indicators, you click indicators and then you type volume. There is a volume indicator. When you click on it, then the volume is added. Now you can see the volume is added here. So I'm just going to hide the chart here. When you click on that eye there, you've got an option to hide whatever you're looking at. So the volume, we use it in conjunction with the price action. Whenever we see some price action, we also want to look at the volume to confirm what is happening with that. So let's say, for example, we see that Bitcoin, it comes back, it breaks above this level somewhere around 24,000. So once the share price of Bitcoin, or the price of Bitcoin, breaks above this level, then we would like to see a bigger candle printed there. The bigger the candle, it shows us that there are more people participating in that market. If you look at these previous candles, it showed us that there were more people that were participating in there. You look at that falling share price on that day, you can also see here that there is an above average volume. You look at yesterday's candle there which was green, you also see that there were a lot of buyers. So you can combine the information that is coming from the candles themselves, and then you combine it with whatever you see on the candles, on the volume there. As long as everything remains flat, there's something that you can just say that, okay, this is the average volume of Bitcoin. So the stuff that you're interested in those above average volumes that are happening there. So whenever the volume is above that average trading volume, then you want to see what happened. You look at this day, you see there were 2 green volumes, people were trying to buy Bitcoin. Then we see that the price of Bitcoin went up a bit. On this day, the volume of Bitcoin of sellers, whenever it's red, it means that the sellers are pushing the price. If it's green, it's the buyers that are pushing the price. So from this we can see that the sellers on that day, they overpowered the buyers, and then they pushed the price lower. There was a decent amount of volume, and then yesterday we can see that the buyers, they pushed the price further up, then they overpowered the sellers. So whenever you see this abnormal or above average, then that is the price action that we're interested in. We are not interested in the days where there is just a low volume. A low volume, it's a period of low volatility. If you are a trader, you want the market to be volatile. For example, if you look at these days here, it was a period of low volatility. The price was just bouncing up and down in a small tight range. But when you look at this volume, there was a lot of volume. Then you can see that the price bounce was big. So this is the kind of market action you want to see, especially if you are a short-term trader. So now, whatever indicator you want to add, just go to indicators, and then you start typing the indicator. Some people, they like to use a relative strength index, which is a RSI. When you click on RSI, not PSI, we're not looking at CAS, we're looking at a relative strength index. When you click on it, then the RSI is also added. I'm not a person that uses an RSI, but I will just briefly describe how other people use a RSI. So in this case, you can see the RSI, it has these prices 70 and 30 depending on where the RSI is at. So when the RSI is closer to 30, some people conclude that the security is oversold, and then when the price is closer to 70, in this case we see this 3, it didn't touch 70, but it was just closer to 70. So if, let's say for example, the RSI was around 70, other people, then they can conclude that it is oversold. It doesn't matter which indicator you are using. There is no indicator that is better than the other. What is important is your understanding on the indicator and how you interpret that indicator, how you use that information. Because I'm not, like I said, I'm not using RSI, but if I'm using RSI, there are certain things that I'm looking at the RSI, I may have a different interpretation compared to other people. And then another indicator that some people, they like a lot in the market, it's MACD, which is moving average convergence and divergence. So when you type MACD, you can see MACD is added, moving average convergence divergence there. So when you click on it, then it should be added in the chart as well. So now we have the MACD. So the MACD has different things. So we've got the MACD line, which is the blue line, and then we have the signal line, or the other one is the signal line, the other one is the blue line. So depending on how you use a MACD, other people will say if there is a MACD crossover, then they buy. If there is a MACD crossover going to the downside, then they sell. Once again, if the MACD crossover is on the upside, they buy. Again, it's your understanding of the tool and the interpretation of the tool. Then here there's a histogram. You can see there's this crossover that happened, but then from there, whenever the crossover happened, when the MACD line was below the signal line, or when the signal line was below the MACD line, we saw that in the histogram the prices were below 0, and then once the crossover happened, the prices have been above here until the crossover happened. Again, make sure that you understand the tool that you are using, because it is pointless to use something that you don't understand. Right? And then the other indicators that people normally use is moving averages. So it doesn't matter which moving averages you are using. There's a different kinds of moving averages. So the simplest one is just the simple moving average, but also there is moving average exponential, then some like in this case they said their weight, then they just differ. So we're going to plot the moving average as it is, the SMA, the simple moving average. Then we're going to plot the moving average exponential, and then we're going to also plot the smoothed moving average, so that you can see the difference between the three. Okay, what is this? Why are we having that upside thing? So I'm going to change the color of each. So you can see here we've got the simple moving average, the exponential moving average, this the smoothed moving average. So when you click on settings, then you can change the length. In this case, I want us to use the 50-day, because we're looking at the daily chart. I want us to look at the 50-day, but under style, then I'm going to change the color so that you can see the difference between the two. So I'm just gonna make this one red, so that it differs from the other one. And then look at the exponential moving average again. The length of that moving average, I'm gonna set it to 50, and then change the color, make it orange, so that you can see the difference between the two. And then lastly, we're gonna look at the smoothed moving average. I'm also gonna change it to 50, and then let's see if you can add a bluish color so that it differs from that. I hope that none of you are colorblind. You can see the colors, the different colors in there. So in this case, I'm going to hide the price so that you can just simply focus on the moving averages. So you can see all of these moving averages, they have the same period. They are all calculating the 50-day moving average, but they calculate them differently. The 50-day moving average, simple moving average, you can see the way it responds. And then the exponential day or exponential moving average, it also calculated differently. And then the smoothed moving average, it also works differently. It doesn't matter which one you are using, as long as you understand why you are using that one. The most important thing is consistency. Don't look at the simple moving average when you want to make a decision, then tomorrow you want to make a different decision, and then now you're switching to exponential moving average. If that one is not working, now you want to switch to the smoothed moving average. Whichever way you use to calculate the moving average, make sure that you are consistent, because the success in trading does not come from finding a perfect formula. It simply comes from you having a discipline to follow whichever strategy that you are using. So that's it for today, what I wanted to cover. I hope that you guys are finding these videos useful. If you do find these videos useful, please make sure that you subscribe to the YouTube channel, and make sure that you smash that like button. Once again, if you have any comments and suggestions, please leave them in the comment section. I will see you in the next video.